Well, good morning, good afternoon if anybody's joining us from the Far East, and very early morning or good evening if you, by any chance, are joining us from America. I'm delighted to welcome you to this webinar as a prelude to the Britain and Ireland marketplace. I will wait a few seconds while the guests are spooling in, but we will get going in a few seconds. Well, the participants count has stopped mounting so quickly. So I'd just say good morning again. I'm delighted to be joined by David Edwards, ETOA and others own statistical expert, Joss Croft from UKinbound, and Stuart Heath from Visit Britain / Visit England. We're going to be discussing the prospects, I suppose, both for the Britain and Ireland, but also for the Britain and Ireland marketplace, which is going to be taking place on the 26th of January next month, where there is still time to register, but time is slowly starting to run short. I think rather than say any more, I'm going to hand over to David. But before I hand over to David, I would stress to everybody watching, this is an informal webinar, and we're very reliant on you to give us questions. And there's a question and answer button that you should have on your screen. And if you've got anything you wish to ask, particularly to our statistical guru that we have with us, please do so. But we also have Joss and Stuart here, and we like awkward questions. But over to you, David. You're now sharing your screen, which is excellent.
Thank you very much indeed. So good morning, one and all. We've successfully shared the screen, so that is a good start. So I'm going to be talking a little bit about the following subjects. We are going to look at recent trends in inbound tourism to Europe, to the UK and to Ireland. We'll then look at some forecasts for outbound and inbound tourism. And then we'll consider some of the factors that will shape demand over next year and indeed beyond. So the likes of economics, what's happening to consumer sentiment, a little bit on bureaucracy, and then some of the sorts of events that may have an impact during next year. So a stickler for tradition, we'll begin with the top of that list, which is what's happening at the aggregate level for tourism across Europe. So this is a chart that some of you may be familiar with. What it's showing is the number of arrivals, international arrivals across Europe each month since the start of 2020 compared with the equivalent month back in 2019. So a picture that we're now very used to. But I think what's most noticeable about this chart is that we had a strong rebound during much of last year. But as you'll see over on the far right-hand side of the chart, we've been pottering along at a European level at about 5 or 6% lower than the equivalent month back in 2019 for much of summer and indeed into the autumn of this year. Now let's look at long-term trends for inbound volume and value to the UK, going all the way back to 1980 and taking us right through to the 12 months to August 2023. So we've got the red line on the chart, the left-hand axis, and that's the number of visits from overseas. And then the blue line, the right-hand axis, that is the amount that the UK earns from those international visitors once we've adjusted for inflation. And if we look at the most recent 12-month period, then we find that the volume of inbound tourism had recovered to 90% of its pre-pandemic maximum, whereas the real value, so again, adjusting for inflation, is at 86% of its record level. Now, you may see the odd press release that talks about tourists spending record amounts of money. If you do see such press releases, always ask yourself, have they allowed for inflation? Because if they haven't, it may well be that it's not truly a record amount of visitor spending. Now, visitors come to the UK and to Ireland for many different reasons. But those of you attending Britain and Ireland Marketplace will be most interested in the holiday segment, and that, of course, is the red line on this chart. And we can see that there is certainly a degree of volatility at certain times, particularly back at the turn of the century when we had Asian financial crisis, for Mathesies, 9/11. But over the long term, holiday tourism has definitely been a growth sector for the economy. And if we look at how things have progressed in the 12 months to August, compared again with the pre-pandemic maximum, what we find is that the number of holidays from overseas to the UK was at 92% of record levels. And many commentators during the pandemic said that visits to friends and relatives would be the segment to recover first, and they were indeed correct. But what's most striking is that it's continued to grow. Most recent data are 106% of its all-time record. Whereas something of a laggard, we've got inbound business tourism at 65% of its best ever, and then miscellaneous and study tourism at 75%. Let's look at comparing the year to June 2023 with calendar year 2019 and see which have been the strongest markets in terms of inbound growth to the UK. Well, it's the US of A, which is way out in the lead there, with almost 900,000 more visits in the most recent 12 months compared with calendar year 2019. That's an increase of a fifth. We've got Canada also doing very well. Then Israel, relatively small market, was growing really very strongly up until the summer of this year. Clearly, that growth has evaporated in the last 2 or 3 months. Now, these markets that are up compared with 2019, and we've mentioned the US, but it's not just the UK or indeed Ireland that have been seeing really strong growth during the current year from the United States. Indeed, if we look at outbound data from the US, we see that during the month of October, Americans made 13.7% more outbound trips by air to overseas destinations than was the case 4 years earlier, and that departures to destinations in Europe, they were up 6.7% compared with a pre-pandemic October 2019. So yes, there are markets that have grown, but there are also markets that are still in negative territory. So over on the right-hand side, we can see that it's China that is, 86% down on where it was back in 2019. So a loss of still almost 800,000. But we can be optimistic that that deficit will diminish over the months ahead, as the Chinese now clearly, since the early parts of this year, have been able to travel, but the airlines are certainly now ramping up their supply. So 2024 should certainly be a better year than 2023, even if it's not back to where we were pre-pandemic. But perhaps the most troubling point in this chart is the fact that some of those core European markets, so we've got France, Germany, Belgium, those sorts of places, those are generating far fewer visitors in the most recent 12 months for the UK than was the case back in 2019. So that, I think, really is somewhat of a concern. Try and bring things even more up to date, and this is looking at passenger traffic through Heathrow. So yes, it's both outbound and inbound, but again, it tells an interesting picture. So what we're doing is comparing the most recent 12 months through to November, the blue bars, with the best ever 12 months, those are the red bars. And we can see that it's the Americas that are really in record territory, whether that's North America or Latin America. Whereas Asia Pacific over on the right-hand side, that's the route segment that's still down by about a fifth. But also notice, really important for traffic to and from the EU, that relative terms, down by about 10 or so percent, a bit less, but still down on where it was prior to the pandemic. So there's relatively limited data in recent times for inbound tourism to Ireland. I think they started publishing data again from May of this year. But one chart I did think it would be worth sharing was looking at inbound visits to the Republic of Ireland over the quarter century prior to the pandemic. And we can see it is again a story of growth. Not in each and every year, but for the long term, yes, this was a growth industry for Ireland. But where visitors are travelling to Ireland from has seen real variation. Europe up by 111% in terms of visits to Ireland, but the Americas up by 212% over those 24 years. East Asia and the Pacific, now a relatively small chunk of the market in terms of volume, but relatively important in terms of value because these visitors stay longer and spend more per night, that grew by 336% over that period. Now let's look at some of those forecasts. And the most recent set of forecasts for outbound tourism from Tourism Economics reveals that the growth is going to be fastest from Northeast Asia. However, this is about catch-up rather than necessarily real growth. So yes, we can see strong growth from Northeast Asia over the next couple of years, also to an extent Oceania growing strongly. Now, that series for North America, Northern Europe, Western Europe, outbound travel of 12% and 8%, I did actually go back and double check. And if you looked one decimal place, there is variation in the forecasts that Tourism Economics are making. But generally what we're seeing is good growth starting to diminish, but still we're looking at growth overall in outbound tourism that is somewhat ahead of what would have been a typical figure pre-2019. But remember, many origin source markets are still playing catch up. What about the inbound tourism growth forecast for Northern Europe from Tourism Economics? So here we're looking at estimates for this year, next year, and the year after. So again, it's a story of diminishing growth, but still growth. And if these estimates are right, the likes of the UK and Ireland will probably end this year at about 95% of pre-pandemic, but next year is the year during which, providing nothing bad happens, we will actually get back to where we were 4-5 years ago, and then growth of almost 8% the following year. One of the big drivers, of course, of tourism is how well off people are. So what I'm looking at here are data from the International Monetary Fund for recent and forecast growth in real GDP, so again, adjusting for inflation. Now, for the most part, over the past 2 decades, if you'd shown this chart, we would have seen China being the dominant growth economy. However, that has changed somewhat. So over on the far right-hand side, we can really see that India is the economy that is powering ahead. Yes, by our standards, China's still growing really strongly, and forecast to do so over the next couple of years, but at a slower pace than has been the norm for much of the past 10-20 years. And there are still considerable worries about some aspects of the indebtedness of parts of the Chinese economy. Many of our core European markets for both Ireland and the UK, though, really rather sluggish economic growth. We can see Germany forecast to see a recession this year, and many analysts think that that may persist into next year. Over on the far left of the chart, the US, actually, the most recent data suggests that these IMF projections for the current year may be underestimating the performance of the US economy. Now, if you're traveling to the UK or Ireland from the likes of America, you will need to change your money. Or even if you're not physically using notes and coins, you will find that you're paying a currency exchange on your credit card bill. What I'm looking at here is how much it costs Americans to buy a pound, that's the red line, or a euro, that's the blue line. Now, if these lines are going downwards, that means it's getting cheaper for Americans. If they're going up, it's getting more expensive. So we can see, following the global financial crisis back in about 07-08, it got way cheaper for Americans to travel to the likes of Ireland and the UK. And that has been a trend that has largely persisted for much of the past 15 or so years. Over on the far right-hand side of the chart, we can see that we're still offering really good value for money, but not quite as good as was the case around about 12 months ago. Now, inflation has, of course, been much in the news. And what I'm looking at here is the overall cost of passenger travel by air, the blue line, relative to the overall consumer price index, the red line. And we can absolutely see just how much airfares have, on average, spiked in the past 18 or so months. That doesn't mean to say there aren't bargains to be had, but overall, airfares have been getting much more expensive. Looking ahead, there's some good news, though, for next year, as there are lots of new and seasonal routes being introduced. So a lovely little test here to see how good you are at 3-letter airport codes, but I'll help you out. We've got JetBlue introducing new flights from the likes of JFK and Boston to both Dublin and from JFK to Edinburgh. Then we've got WestJet operating new flights from the likes of Toronto Pearson and Halifax into Edinburgh next summer. And also we've got Hainan Airlines operating from Beijing Capital Airport into Manchester, plus there are lots of other new and exciting routes to look forward to both Ireland and the UK next year. But that inflation that I spoke about is really worrying Europeans. So every couple of months, the European Travel Commission poll international travellers across Europe and ask them, well, what's concerning you at the moment in terms of travel prospects? And we can see that from the October wave of this survey, the rise in the overall cost of my trip due to inflation and economic situation and personal finances are the two real big worries. But in third place, we've got extreme weather events, with 14% citing that as a concern. About a year ago, that was around about 8%. 2-3 years ago, it was barely registering. So it's really noticeable that more Europeans are really starting to say, well, extreme weather events are a concern. But fascinatingly, down at the bottom, the environmental footprint of my travel, that's stubbornly about 5 or 6%. So yes, people are worried about extreme weather, but footprint of people's travels, only a minority are saying that's a concern. What about overall consumer confidence? Really long-term trends from the OECD. So this is a band of about just over 3 dozen of the world's most developed economies and looking at how confident consumers are. So over on the far right-hand side of the chart, we can see a couple of dips in recent times. The first of those dips was the pandemic. Then things started to get better, but the second, even more noticeable trough, that was following Russia's invasion of Ukraine in the early months of last year. Things then started to pick up, so consumers feeling a wee bit more upbeat until the most two recent data points, so for October and November of this year, when overall consumers have started feeling a little bit more uncertain, and that of course coincides with events in the Middle East. That's quite a bit on the demand side. What about the supply side? And this applies both to Ireland, even though I'm looking here at data for the UK. If we look at vacancies in sectors closely aligned with tourism, we can see that vacancies have started to decline from the peak back in 2022, but overall, still about 30,000 more vacancies within our sector than had been the case back in 2019. Perceptions then. Here I'm drawing on data from the Anhalt Ipsos Nations Brand Index, and we're looking at how the UK is ranked out of 60 nations, and I thought I'd compare 2015 with 2023. So by and large, this is good news because most of the world feel quite positively about the UK across many things that really matter for attracting people to a tourism destination. So remember, these numbers that you're seeing are the ranks out of 60. Slightly less good news is that people's opinion of the UK is not quite as good now in 2023 as it was in 2015. And also, less good news is that a couple of key areas of weakness have become even weaker for the UK in recent years. So is rich in natural beauty. We can see we've slipped from 18th to 27th. And down at the bottom, if I visited, people would make me feel really very welcome, slipped from 11th to 19th over the past 8 years. Now, I don't have granular data for Ireland and Scotland, but I do have the headline metrics. And in 2023, we've got Ireland being ranked overall 18th out of 60 nations and Scotland being ranked 16th. The survey also looked at nations as a personality this year and found that Ireland was ranked 3rd for happy and that the UK was ranked 3rd for sophisticated, just proving that reality and perceptions are not always one of the same thing. And we've also got the UK being ranked 18th for the country's food is good. And also proving that stereotypes really do persist is that the French ranked the UK's food 60th out of 60. On then to bureaucracy. Most visitors to either Ireland or the UK don't need a visa, but those visiting the UK from the likes of India and China do. These are the latest costs of getting a visa. So £115 if you want a 6-month visa, through to almost £1,000 if you want a 10-year visa. All those visitors who don't need a visa, so most Europeans, will for long require a electronic travel authorization in order to visit the UK. And it will cost about £10. It will be required even if you're just transiting airside. It'll be valid for 2 years or until your passport expires. Now, the EU are introducing their own version. It's called an ETIAS. That'll cost the equivalent of £6 or €7. It'll be valid for 3 years, so longer than that for the UK. It'll be free to the under 18s and the over 70s, and it won't apply to airside transit. Likely to be introduced in 2025. It's also expected that the EU will introduce its entry-exit scheme in around about 10 months' time. And that will mean that all non-EU citizens will have to be fingerprinted and have an electronic recognition scan of their face when they enter the EU. So that's going to be fun. But some better news in terms of bureaucracy. The UK's government has agreed to allow French school groups to visit without full passports. So that should certainly boost that segment, which has really been in the doldrums during 2024. So final slide, let's look at some of the various events that may shape tourism in 2024. We have to mention, unfortunately, the geopolitical environment, because that remains a significant headwind at the present time. So if the conflict in the Middle East worsens, and it's already very bad, of course, there are ramifications for traveller confidence, for commercial aviation, and indeed the wider macroeconomic situation. We're already hearing about the issues in the Red Sea, and that may well impact global supply chains and indeed then inflation, which has until now been falling in recent months. Now in Paris, we've got the Olympic and Paralympic Games taking place in July and August, and that may of course displace some inbound traffic if securing hotel rooms and accessing some key tourism sites proves challenging. So that may well be a fillip for tourism to Ireland and the UK next summer. And there will be a general election in the UK at some point next year. And of course, we know the date of the US presidential election in November next year. And it's worth saying that despite the urban myth, I've looked at the data between 2000 and 2019, and outbound travel from the US actually grew at a faster pace in election years than in non-election years. And frankly, if you were in America and you knew it was a presidential election year next year, wouldn't you want to go somewhere that isn't the US? With that, I will stop sharing and hand back to you, Tom. Thank you very much.
Well, thank you, David. That was a magisterial tour of the horizon. You stolen my thunder because we were going to do a tiny news bulletin on the fact that election years are not bad news for inbound tourism into Europe or the UK. And you're right, it is a complete urban myth. But I don't know why it keeps persisting. It sort of hangs around like a bad Chinese meal. Anyway, look, thank you so much for that. I think I think it's probably just right to stress that, and we're really happy to take any questions on this. But the purpose of today is just point people in the direction of the main marketplace that we organise for Britain and Ireland and all origin markets. And at this marketplace, we're going to be having members of ETOA and UKinbound who sell the UK throughout the world. And we have many buyers there from ETOA and many buyers there from UKinbound. But we will also be having a number of buyers coming from Visit Britain. And Stuart, Heath has very kindly agreed to come along and just run through what that program of hosted buyers looks like. Stuart, I'm going to hand it over to you, if I may.
Thank you, Tom. So after David's sterling efforts at sharing his screen, I'm going to attempt to do the same. So hopefully this works. And if I go to that one, there we are. I now can't see anybody. So Tom, could you just give me a verbal all good if I'm sharing and it can hear me okay?
I can hear you fine and it's all good.
Wonderful. Excellent. So for those that don't know me, my name is Stuart Heath. I look after all of our UK industry engagement here at Visit Britain, and also have responsibility working alongside a team of people internationally for our B2B leisure events and missions program. So just to give a little bit of context as I try and move forward. Some of you may be familiar already with what we are calling Showcase Britain, which is our Visit Britain overall hosted buyer program, and it incorporates a number of different facets. So we work really, really closely with both UKinbound and ETOA to bring over 120 international hosted buyers from across different international markets. We've got around 16 of them this time. This really is part of our focus now on face-to-face events. We had strong feedback from both UK stakeholders and those internationally that it is all about face-to-face, and working with ETOA and UKinbound around BIM brings a lot of economies of scale and enables us to be really efficient in terms of how we work. So all of these buyers will be attending BIM on the 26th of January. And after which they will be going off on a series of educational visits all across the country. Just as a quick heads up, on the day before, we will be running a product update session with representatives from Visit England, Visit Scotland, Visit Wales and London partners to give them a bit of a flavour for what's new in each of those areas on the day before. So they're not coming into BIM kind of cold. They will have had kind of a bit of a warm-up as to what's new and what's up and coming. So who is it? Who are we bringing is the big question. And here I've got a bit of a breakdown in terms of the numbers as to who is coming from which places. So you can see here all of the markets that we have got groups coming from. Unsurprisingly, you will see that we have indexed higher on markets such as the US and Germany, being markets that have a really strong trade presence, but also ones that we know that you as UK and Ireland suppliers have got the greatest emphasis on. So from our surveys and things that you have filled in, these are the markets that you said are important. Similarly, trade strong markets like India and China, where we had missions this year, we've also ramped up slightly higher as well. But this gives you a bit of a breakdown of all the markets that are coming. I'll go into a little bit more detail on that in a minute, but just for interest, so you can see, we work with the various different nations and regions across England to run a series of educational trips. We also work really closely with a group of procured DMCs. If there are any DMCs on the call who would like to know more about this and understand how to work with us, please do drop me a note. And I'll quite gladly talk you through the process for getting onto the register to bid for future trips. But this is the program for this year. The way in which we decide who goes where is a blend of the priorities of the LVEPs, the destinations and the nations of the UK as to where their priority markets lie. We also look at the international demand, which is feedback from operators, the key operators internationally as to where growth is. And then really importantly, we look at historically as to where people have been previously. We want to ensure that we're spreading this benefit around the country. So we always look to where people have been in previous years on educational trips to help look at how we prioritize who is going where. I should just mention that all of this information will be coming onto our industry website, visitbritain.org, later this week. So, all of this will be readily available for you online to sort of see and follow up on. So just in terms of what these people are looking for, I've been out to all of our regional teams just to give a bit of a top line. I'm not going to go into exactly who all these businesses are. All of that will be available both on the BIM website, so you'll be able to see who all the buyers are, what companies are coming, and we'll also be holding that information on visitbritain.org as well. We're just kind of in the final process of getting the final people finalised at the moment. So in terms of who is coming, I'm not sure how many people know the Visit Britain teams. So I'm just going to do a quick run through by region. So each of the lovely faces that you see on the screen are going to be leading the respective groups. They will also be available for meetings in the afternoon at BIM. So they'll also be at the networking sessions and things on the day as well. So a good opportunity for you to sort of touch base with them as well while they're over. So from APMEA, really the kind of feedback is that suppliers are really looking to do business with, the buyers looking to do business with suppliers that have a good understanding of the sensitivities around the market, language, the food and beverage offer, and the style of doing business. Very strong DMC markets these, so very keen to meet with DMCs, but also transport providers. Hotels that cater for business from the Asian markets, that are ready to offer food menus and things like that, that cater for the region. Again, very much of interest. And particularly for markets like India, a lot of these buyers will have sort of two hats on, although this is predominantly leisure. Particularly in places like India, a lot of these buyers would also have MICE within their portfolio. So worth just keeping in mind that that could be something that comes up within conversations. So moving on to the US and Australia. So again, on the left-hand side is the team that will be coming over. They will all be available for meetings at BIM, and they'll be taking these groups around the country as well. So particularly prevalent for the US, but in fact for all markets. It won't come as a surprise, I know, to any hoteliers on the call, or indeed DMCs probably, that static rates is always an ask that they're looking for. Rates further ahead, again, a challenge for them, and quick turnaround. I think there is a bit of a feedback, or at least an acknowledgement of a turnaround time from inquiries from the US. I know this is an issue across the piece, but particularly highlighted from Brazil was the requirement for language driver guides in Portuguese. I know that's a big issue sort of across the piece, but again highlighted from the international side as well. A lot of appetite looking for hidden gems, things that aren't necessarily prevalent in coming across programs. So there's a real appetite for seeing things that are new, business innovations as well. Attractions that are open off-peak. There is definitely increased demand from buyers internationally across these markets to be spreading that season, which is great news for us, because as people will know, this is a key objective of Visit Britain. So, where there are attractions that have got an offering outside of peak times, being able to bring that to the fore. And then one coming out from Australia was a trend towards what businesses are doing around sustainability, and increasingly questions are being asked around that. So just worth keeping in mind that particularly for Australia, but other markets as well, is a theme that is becoming increasingly prevalent. And then just sort of finally from Europe, a number of people coming over from Europe here. The team, again, will all be available at BIM for meetings in the afternoon. Good mix of different operators coming from Europe. There are some of the major, more established ones, but also they're bringing in some new partners as well who are really looking to grow their portfolio. Strong feedback on the face-to-face element across the piece, but particularly from Europe, India as well. Really strong feedback there that face-to-face is kind of the way forward, the importance of building those relationships in order to do business. A lot coming out for new experiences. I think we're getting feedback from Europe that last year it was about existing programs and getting back on their feet, and now a lot of those operators are hungry for new product ideas, experiences, and hotels. So they're now ready for that product development. So all in all, a very sort of positive outlook from Europe in terms of their hunger for new product and new ideas for programs. So that was my presentation. Happy to answer any questions if we have them, and I will on that hand back over to Tom.
Well, thank you so much, Stuart. Again, it's a very comprehensive view of what's happening. It probably before I turn over to Joss, I think I just set the scene slightly for what's happening at the Britain and Ireland marketplace. For those who don't know it, what we are is we're taking over one of the biggest uninterrupted um, spaces in Europe at the O2 Intercontinental. I think it's about 3 to 4,000 square meters. In there, you will find about 200 to 250 tables of buyers. And these will be sitting there. And if you're selling to these buyers, you will have pre-assigned appointments that will be set according to who you want to see and also who the buyers want to see. It's a two-way traffic. There will be roughly 32 appointments in the day. And the day runs from just about 10 to 9 right the way through to 5:30. And I think you will find that if you're coming to this event, usually it's a uniquely rich point of view from the point of view of a supplier. We would aim to be giving people about 28 to 30 appointments in a day. Can't guarantee that. It's determined by who wants to see you. But we have a very, very, very rich mix of buyers for people to sell to. And I'm just going to hand it over to Joss. Joss, what are you looking forward to from this event?
Sure. Well, I always absolutely love BIM. It really is that central focus point for selling the UK. It's a wonderful opportunity. If you've not been and you're on the call and you're interested, really do sign up. It is that one-stop shop. It's your ability to get in front of, upwards of 200 buyers who are there, who are really interested in UK. Obviously, Visit Britain bringing across some of the sort of self-qualified buyers. I mean, the fact that they're prepared to take time out of their busy diaries to come to the UK means that they're really interested in the product. So it's a great opportunity. It's good to meet up with old colleagues, old friends. Good to do a bit of networking. Good to pick up some insights about the market as well. I think that's one of the most useful things is really hearing from those operators what's happening in their markets and how you can adapt your product to fit those customers best according to what your organisational ambitions are. So great event. Really looking forward to it, Tom.
I think a shout out not just to the Visit Britain buyers, but also the ETOA and UKI buyers, because these guys, we've not paid for them to turn up. They're turning up because it's their job to buy and source product. That's what they're here to do. I'm not for one moment saying that the hosted buyers don't fall into that category, but these people, I suppose, in some ways, you can really say that they're motivated insofar as pay their membership of UKinbound or ETOA, and it's a bit like the chicken and egg. The bacon and egg. The chicken is involved, but the pig is committed. I think the ETOA buyers and the UKI buyers are there. They're professional people who are almost paying their way to be there in order to source product. What sort of product are they looking for? Well, a lot of them will be looking for the product they're always looking for, because that's what sells, which is going to be hotels, it's going to be attractions, it's going to be the things that people want to see when they come to the UK. But they're also desperate to find new product that helps differentiate their offer from the other people. So they're looking for new product. As Stuart said, I think you described it as a new hidden gems or something. I think it's just something that's new, or something that can be customized, that it makes that operator unique. They're looking for some kind of USP from the UK product base. Now, do we have any questions? Say hi without looking at there's any questions. We had one very interesting inquiry. No, we have got no open questions, unfortunately. One very interesting inquiry as to what GCC stood for, and I think it's the Gulf Cooperation Council or something similar. It's the group of Gulf states.
Tom, if I could just jump in there, just because overnight we're actually at the moment we're running one of our quarterly business barometers, and it's still out in field. But I asked the research company if they got anything that they could share with me last night in preparation for this, and actually, it's really positive news. So I've got 75% of the members that say that their confidence levels are high for the next coming 12 months. That is down slightly from when we ran it the last quarterly service in September, October. But it's only down a little bit, and it is down from record levels, actually. So that's really positive. And I've got 85% of the members saying that really their bookings for Q1, so January, February, March of next year, 85% of them saying that they're above or the same as 2019 figures. So probably correlating quite well with what David was saying there as well. I think those new routes are really exciting. We've still got a few problems in the system. David touched upon a few of those supply side areas, but the demand is still strong. And that's kind of in spite of some of the increases in visas that we saw, the introduction of ETAs that David mentioned as well. And of course, the reintroduction of tax-free shopping that we know would generate more business from particularly China and GCC, but actually the opportunity is there from the European Union as well. So, you know, we're now seeing real data come in terms of what the impact of the removal of tax-free shopping was. Before, it had all been an argument with Treasury around what modelled behaviours we were going to see. I was talking to Heathrow earlier on in the week, and they're back up to roughly, again, we saw from David's slide, back up to roughly 100% of their 2019 traffic and passenger numbers, but within the airport, they're only up to 70% of the spend. And that missing 30% is the missing duty-free, tax-free shopping that they were able to do in their airports. In fact, it's worse for China. It's about 60% down. You know, we've still got some problems in the system, but really, I'm looking forward to a very, very strong year this year coming. As long as people can do the business, as long as people can get the contracts in place, yeah, should be very positive this year.
Just to echo what Joss is saying, I think if you're looking at when I was talking to my members, chiefly my North American members, they've had a very good year this year, and most of them, if you look at general traffic, America has been doing very well. People who are doing particularly well in 23 were the tour operators, so they kind of beat the market, I think, and they're looking for a really good year next year, but they're also looking at a very, very strong year in 25. And don't forget that the planning that's taking place at BIM really is for 25. I mean, it's mid purchasing season for the main school to tour operators and the main FIT operators. They're trying to put product together for the 25 program. And if the figures that David was projecting are correct from tourism economics, and there's arguably they're better than this. Even the modest estimates is that we're looking at a 10% and 8% compound when I was at school was roughly 20% growth on 23 figures. And so we're looking at a really significant surge in demand from North America. And this is good. How we're going to fit the Asian demand in amongst this surge in American demand is going to be one of the big questions facing us in 24-25. I don't know if you've got an angle on that, Stuart, do you?
Sorry, Tom, I was replying to a message in the chat.
Good answer. Well, I agree. I was just saying, how are we going to fit in all this demand from Asia, given the surge in demand from North America? Is it going to be just what sort of fight do you think there's going to be? Well, you know, we've got problems with capacity at the moment. How is it going to be resolved?
We do, but I think, you know, we've got part of our role at Visit Britain is to help try and spread that around the country. And I think, you know, you saw from some of the feedback we were getting already from people, they're looking for ways in which they can send tourists around at different times of year. You saw that from the demand for attractions that are off season. You know, and for us, there's a big priority around areas such as the northeast of England, where there is currently capacity. So I think it's about how do we work together to develop product here in the UK and take what where we do have capacity and find ways in which we can help spread that around. Because you're absolutely right, Tom. You know, there is huge demand coming in from the US, and you know, as Asian markets do open up, that's going to get more challenging. So I think it's about how we utilize the areas of the country where we do have capacity and find ways in which we can spread that around more.
Great. Now, we've got two questions coming in. I think the first one we've got is really worried about the extent to which hotels are being used to, well, we've got one key issue that all DMCs are facing is the lack of available hotels at reasonable rates. This is driven primarily on two factors: price increases, and over 400 hotels in the UK are out of the market due to housing asylum seekers. This is a knock-on effect of putting everyone off, effectively pushing up the rates. Do we have any news on it? And was this where this may end? Joss, do you have an angle on that?
Well, I'm afraid I don't think there's any easy or short-term answer on this one, Dave. I think this is going to be a long-term systemic problem. It's not just the UK. This is also actually, we hear, potentially actually slightly more prevalent in Ireland. Of course, Ireland has taken a huge number of refugees and asylum seekers, particularly actually from the Ukraine as well. And that's taken a lot of stock out. This is where the importance of actually getting your rates out in time comes in, because that demand is there. So being able to service that, any suppliers on the call or attending BIM, yes, do have your rates for 25 and be able to issue the allocations. I'm afraid to say I can't see this being ended in the short term. We hear constantly from critics of government or government themselves about the cost per day of the use of the hotels. First and foremost, of course, refugees and asylum seekers need somewhere safe and warm to stay. So we do recognise that. But it's actually not the £8 million a day on the cost of hotels that is worrying for the tourism industry. It's about the inability of operators like Dave, who are trying to put business into destinations where they've potentially always done that. They're no longer able to do that. And it's the knock-on impact that that's having on the bars, restaurants, clubs, attractions as well, as that £8 million a day. So I'm sorry to say, Dave, I can't think of a short-term solution. We know that the demand is there. Of course, in terms of building hotels, that's a big sort of 5-10-year programme. And the UK does have the highest investment in its hotel stock in Europe still. So that's a positive. But I guess, to Stuart's point, it's about trying to see whether there are other areas of the country that still have that attractiveness, where you've got the availability. A great example of this is Scotland, where West Coast is, and this is not to do with refugees or asylum seekers, this is just to do with the lack of stock in the West Coast, highly sought after destination by travellers of all nations. But there just isn't the hotel stock there. You look at the East Coast, you can have fantastic Scottish experiences, the castles, the fishing, the wonderful Scottish distilleries, the salmon up there, all on the East Coast, where there is a lot more availability. So I think some of it's going to have to be about moving business to different destinations. I know that's not going to be a popular comment on behalf of some of the destinations who have historically been able to welcome groups, but we've got to fit these people in somewhere and give them a wonderful experience. And there are parts of the country that can do that, as well as some of the more favoured and busy destinations, if you put it that way.
Thank you. Stuart, do you have an angle on that?
No, well, I just to sort of build on what Joss was saying, and completely agree with everything he just said. One of the challenges that we face as Visit Britain in the way that we advise government on issues is the lack of real-time data. So, Dave, and any other tour operators that are on the call, if there are live or real term facts that you can share with us on the impact that this is having on your business, then at least that gives us some hard numbers to be able to go and say to government, well, this is what industry is facing. So, I totally agree with Joss. I think this is a long-term issue that we won't fix in very, very quickly. But, part of our role is to advise government on tourism. And, we don't have the facts unless we have those shared with us. So, an ask from me would be to share anything that you can. I did put my email address in, I think it was in the chat actually. But that, please do get in touch, and be very happy to talk you through anything around that as well.
I think, sorry, Tom, if I could, just another one is that any conversation with any politicians, this has to be about speeding up the processing time, because these peoples are in the hotels whilst their applications are undergoing processing, and I think that processing is up over the 120, 140,000 level at the moment. The sooner we can process these people, given that actually a large proportion of them are allowed to stay, then we can move them out of the hotels. We can get them working in the hotels, which again, to David's slide, in terms of some of those vacancies, that's where we really need the people. So, rather than potentially thinking how are we going to stop this system, which given global migration purposes is going to be very, very challenging, is how can we speed up those application processes so that we can get those who will be fantastic workers. The industry needs those workers. So how soon can we get them working rather than necessarily staying in the hotels?
Okay, I've got one question here, which is pertinent, which is, do you think the UK will benefit from the Paris Olympics, either from people avoiding the Paris and coming to London, or of Olympic visitors including the UK due to its close proximity? I think we've not heard from David Edwards for a while. And David, I know this is one of, not exactly your specialist subject, but a subject, I think we might say.
Indeed, it's not a specialist subject. Well, this time next year, we will have found out. But there is, as I mentioned in the slides, a realistic prospect that some operators may find Paris just overly challenging if the places they want to take their groups to are off limits, or indeed that the hotels are priced unfavorably. So it's not impossible that there will be some fillip, as I said, for both Ireland and indeed the UK, for those who perhaps would have thought about going to France or Paris in the summer. But equally, maybe those groups will think, okay, we will go to Toulouse or to Nice or to Marseille. It might be that the displacement is within France rather than to other destinations. But on balance, I would say that the UK and Ireland won't see a reduction in tourism because of the Paris Olympic and Paralympic Games. There is a possibility of an increase, but it is no more than a possibility.
Yeah, I mean, I ought to be careful because I'm on record saying an awful lot of things on this subject. Josh, did you have an angle on this before I weigh in?
Yeah, well, just really echoing David. I mean, I recollect during the 2012 games that London managed to hold its visitor numbers, which was, I think, the first time that a summer host destination had been able to even hold it. And there were opportunities during those 2012 games. We were very worried. I was working at Visit Britain at the time, and we were very concerned that people would be put off and that they would travel to other destinations. When your core brand proposition is around heritage and culture, as ours is, as France's is actually, then you run the risk of a sporting event of that scale putting people off, people who aren't interested in it, people who may be put off by the prices and the busyness. I mean, we've already heard that the Paris Metro are doubling their prices during the Olympic Paralympic periods. So we may see that there's a great opportunity to get people across to the UK that might have thought of travelling to France, and the operators may assist in that as well. And then, of course, I think if you're travelling long haul, and what tends to happen with these Olympic Games is people tend to come on waves as well. So their sponsors organise waves of people that arrive, and when they've arrived and they've done the two events that their sponsorship programme encourages them to do, then there is a great opportunity to get them to jump on that Eurostar 2 hours later. They're in London, and of course straight from King's Cross to the rest of the United Kingdom. So there's some good opportunities in there, and anything that's kind of raising the profile of Paris, again, London's got to think about where its share of voice is going at the same time as all that media coverage is hitting on France at that time.
I think, and I appreciate, I've been on record as describing the Olympics as a sort of tourism neutron bomb, but I think I think the thing to realize when it comes to Paris, that the number one product ETOA members sell is not London, it's not Rome, it's not Italy, it's a London-Paris combination. And if you remove Paris from the London-Paris combination, there's a danger that the number one product we've got to sell is not on sale. We're selling an alternative, which will, in the eyes of many customers, will not be as good. So I don't think we're necessarily looking at a great opportunity. I don't think Paris particularly flourished during London. It didn't suffer that much, but it didn't flourish. I think the other factor is do you see regional dispersal? It's a bit it's very, very difficult to sell a destination like France if you're not including Paris. The idea that people going to the United States say, "Oh right, we will forego going to New York. We'll go to Podunk, Idaho instead." It's not, it's not normally a correlative. Anyway, on that point, I'm sure what we need to do is sit back and watch. The Olympics is a great occasion. We have to enjoy it, and we'll see how it flows. But I think the short answer from the panel here, if there is a panel, is that I don't expect to see a flood of Paris refugees coming over to London or the UK in 2024. I've got one question coming up. What is the best way of sourcing hotels for groups from Kieran? Kieran, there isn't a really good way of doing so other than getting in touch with the hotels and seeing what the quotations are. Obviously, there are DMCs that will help you, but I think you may be speaking as a DMC. If you're, there are also hotel groups that have group booking desks, and it would be totally invidious of me to start describing them, but they're widely available both on the ETOA website and on their UKinbound website. They're there. If you look at the chains will have group desks that should be able to assist you. Okay, we are drawing towards the end of this webinar. I don't think we've got any more questions. We've got some interesting statements, but beyond that, I think it's really down to me to thank Stuart, to thank Joss. Joss, do you have anything more you want to say, any chance?
Happy Christmas, one and all. I think, as I say, I'm moving on now from my bleeding stumps period of the pandemic now to looking more positively at the future, and really just trying to demonstrate the power of inbound tourism to deliver on a country's ambitions and how we can help government kind of find the solutions to their problems, and hopefully as well them letting us just get on and do business.
Yeah, Stuart, thank you for, by the way, thank you for referencing the knight with severed limbs. It's just what we need to hear at the moment. Stuart, over to you.
Yeah, I mean, likewise. I mean, I think, from our point of view at Visit Britain, I mean, the partnerships that we have with both ETOA and UKinbound are incredibly strong, and indeed with the whole wider industry. And I think we've got a great opportunity now to continue to build on that. I mean, I'm really looking forward to a fantastic BIM and Showcase Britain as kind of starting off 2024. We've got out with our events program as well for the year, and indeed for the following year. So there's 2 years of proposed events now live on visitbritain.org, and we're really looking forward to working with you all to grow tourism to Britain next year and beyond. So Merry Christmas. Thanks for joining today. And, please do reach out to me and my team if there's anything we can be doing to help. So thanks all.
Thank you, Stuart. And David.
I guess all there is for me to say is don't forget over the festive period to raise your glass, do some statistical adventures in 2024.
And data fun for everyone. And from me, a very Merry Christmas and a Happy New Year to all our viewers. I look forward very much to seeing you at the O2 Intercontinental in Greenwich on the 26th of January, I believe. Thank you very much. Bye-bye, everyone.
Thank you. Bye-bye.